What is going on, team, and welcome to yet another video. In this video, I'm going to be talking about the famous ICT Silver-Bullet. Now, I have made videos on the Silver-Bullet in the past, but this one is going to be a little bit different. The reason that I'm going to be making this video is simply because I believe that the ICT Silver-Bullet is honestly the best strategy for people who are working a regular job besides trading. And the reason for that is obviously the Silver-Bullet being a really time-based model. You really only have 3 opportunities throughout every single trading day to trade it. Now, that will automatically help you avoid overtrading since you are only looking for that setup to appear 3 times a day, 1 hour each. I see so many people not understanding the Silver-Bullet properly. So this video is basically going to be me explaining exactly how I would use it if I personally used it and what you can do to improve your Silver-Bullet trading. So let's go ahead and dive right into it. So basically with the Silver-Bullet, you are only allowed to trade it from 3 till 4 a.m., then from 10 till 11 a.m., and from 2 till 3 p.m. Now, all the times that I just listed is in EST, New York local time. Now, there is actually a reason behind why you are only allowed to look for this setup to appear at 10 to 11 or 2 to 3, right? A lot of people do not know this, but if I go ahead and go to a 4-hour chart here, we are able to take a look at the 4-hour candles here, right? What happens every time a 4-hour candle opens? Obviously, we had a pullback here. This candle opened. The first move of this 4-hour candle on a lower time frame went down before eventually moving up. Here, we had a little move to that down, moved higher. New candle opening, little move down, moved higher. New candle opening, little move down, move higher. New candle opening, little move higher, move down. New candle opening, little move higher, move down, right? Are you understanding what I'm saying? Essentially, what I want you to take away from this is that whenever we have a 4-hour candle open or just any higher time frame candle in general, we're going to go with the 4-hour because that is what ICT does. I now want you to look at this wick down here as manipulation, okay? This right here is the fake move that happens on every single 4-hour candle. You see it here. First move goes up, sweeps the previous highs here, right? Comes down, and then we have the distribution down. We see it again here. Little small pullback, goes down. We see it again here, moves up. That's the manipulation part, moves down. See it again, right? It happens every single time almost. And that is exactly what he wants you to trade. Because if you take a look at it, what time does the new 4-hour candle open? It opens at 10, right? And what time should you be looking for the Silver-Bullet? At 10, right? When does the new 4-hour candle open? At 2, right? So what he wants you to trade is the distribution of the new 4-hour candle open. Now, a lot of people do not know this, but that is exactly what the Silver-Bullet is, okay? He is looking at it from a 4-hour perspective, and he wants you, or he wants this right here, the manipulation move to sweep liquidity when the new 4-hour candle opens, and then you trade the distribution, right? Just like we see with every candle here. For example, right here was probably a very, very nice Silver-Bullet. This was just at 6 a.m. He obviously don't want you to trade that there because that is out of session. But essentially, we had a candle here. New 4-hour candle opens right here. So we have the open here. So we have the open and the close of the candle. This whole move here, right? Swept liquidity right here. And that was manipulation, okay? This right here is exactly where you would enter with the Silver-Bullet on a lower time frame. The manipulation wick of the new 4-hour candle open moved up, swept liquidity, and then the distribution move came, right? That is exactly what he wants you to trade. He wants the new 4-hour candle manipulation wick to come up, sweep liquidity, and then you find the market structure shift in a fair value gap on the lower time frame. That is the basis of Silver-Bullet. That is why you are bound to trade within those hours. That is at least from 10 to 11. That's the new 4-hour candle opening. That is from 2 to 3. That's the new 4-hour candle opening. Now from 3 till 4, that's not a new 4-hour candle opening, but it is an hour where you will see a lot of volume come into the market at 3 a.m. That will typically spike up or spike down, okay? Now throughout the years, ICT noticed that, okay, the volume that comes with 3 a.m. is typically manipulation. And that is why he wants you to trade the distribution side of it as the Silver-Bullet. So now that I broke down exactly what the Silver-Bullet is and why you are trading within those specific hours, we're going to go ahead and look at some technicals because I believe people trading the Silver-Bullet are missing a few key parts in terms of technicals that could up their win rate. So I'm going to go over exactly how I personally would trade the Silver Bullet if I was trading it personally. Now, right here, we have a perfect example of a Silver Bullet. We have 10 a.m. open right on the next candle. So here, and then we obviously want to look for our Silver Bullet within there. Now, this is something that a lot of people seem to think. They think that they need a proper liquidity sweep in order to enter within that specific hour, and that is exactly what ICT teaches. Now, I personally do not think you need a liquidity sweep, but purely you need to know where the next drawn liquidity is and then trade with the order flow. And what do I mean by that? We have an obvious market maker sell model here. Now, I'm expecting this to be the sell side of the curve and then eventually hitting these equal lows over here. And I'm extremely confident that this low here is the next drawn liquidity. So let's see what the 10 a.m. candle is going to do, which we know from the 4-hour time frame, the first move of that 4-hour candle opening is likely going to be the manipulation. Now let's see, and there we go. On a 1-minute chart, the first minute of that 4-hour candle obviously went higher. Now what do I notice here? What do I see? I see that we are holding a gap very beautifully here. Okay, so I personally do not need us to take out this high. I'm perfectly fine with entering before we take out that high. Now, why is that? Well, simply because I'm very confident about the next drawn liquidity. I know where we're going next. So I don't need that liquidity sweep. The best possible scenario that we could have is if this was combined with an SMT, right? And then ICT wants you to trade a fair value gap. I personally do not think that matters whatsoever. A PD array is just an accelerator to get you towards the drawn liquidity. It doesn't matter which one it is. Now, we created an intermediate term high right here. So that is an ideal place to place my stop. Now all I need is some sort of PD array. I could, for example, enter straight off of this breaker block right here. So I actually could have been filled by now. And let's see what price does here. I want to see if we reach for those lows down here. And as you can see, these lows were indeed the next drawn liquidity. However, we did not sweep any liquidity, okay? Now, this is the key part here. You don't always need a liquidity sweep. You need to be confident about where price is going to go next, and then you need to trade with the order flow. You don't want to try and catch reversals, okay? That's not what that 4-hour candle manipulation is for. This right here was manipulation enough for me. I don't need this highs to get taken out, especially when I see that we're holding the bearish gap. That's something that I want to pay attention to. Right, I want to pay attention to what gaps are we holding and which ones are we violating. Let's go to a 2-minute time frame here and have a look. Obviously, we are holding the bullish gaps here, or the bearish gaps, and that's exactly what I want to see, right? When I see us holding the bearish gaps like we are right here, that automatically tells me that, okay, my drawn liquidity is indeed right. We are going to go towards these equal lows, because we're holding bearish PD arrays and we are violating bullish ones, right? We see right here, we have a bullish gap. We completely trade through it. And that is exactly why I do not need a liquidity sweep. I simply just need some sort of PD array to get me towards the drawn liquidity. The only thing that I need is the 10 a.m. to go in the opposite direction of the trend. So we take a look at, obviously, the trend here is bearish. We have the 10 a.m. opening here, goes higher, rebalances this entire gap, closes all the way back into the gap, obviously still holding it, and that's all I need. As soon as this candle closes, I could have entered, okay? Simply because this right here is enough for the 4-hour candle wick manipulation, okay? It doesn't need to go up here, right? It does not need to go up there. If it does, that's great. It doesn't need to. So this is a way that you can make sure you catch the moves with the Silver Bullet. We don't always need a liquidity sweep. We simply just need the 10 a.m. opening bell to go against the trend, which it's doing here. Bearish market, 10 a.m. goes a little bit higher, closes back below, still holding the imbalance here. Okay, I'm gonna guess that these two candles were the 4-hour candle wick manipulation. And then obviously here comes the distribution. Here we have another example. 10 a.m. candles about to open. We want to pay attention to this low here. 10 a.m. opens. We go lower. See if we go even lower than that. Okay. I'm expecting these two right here to be manipulation. That 4-hour candle open manipulation. Now all I need is some sort of PD array to send me higher. There we go. I'm going to enter off of this order block that we just created. Stop at the recent low. Target previous swing high. Let's see. As you can see, price comes down, fills me, and goes higher, right? I didn't look for a market structure shift. I didn't look for a fair value gap. All I knew was that we were starting to switch into an uptrend. 10 a.m. opens, right? That created 2 bearish candles that swept previous lows. Now I'm interested in going long because I believe that those 2 candles were the manipulation of the 4-hour candles. I think what a lot of people fail to understand is that the manipulation can be 1 or 2 candles on a 1-minute chart. It doesn't have to be 5-minute candles. Okay, at that point, it's probably not manipulation. It's actually just the candle going in the direction intended. What I want to see is 1 or 2 1-minute candles go against the trend. That tells me, okay, new 4-hour candle just opened. We are overall bullish. I just got 2 random bearish candles at the time of the new 4-hour candle open. I'm really expecting this to be manipulation, so I should probably start looking for a long now. And if we sweep a low or a high with that, that's even better. But obviously, from the previous example, we do not need to, especially if we are very confident about where price is going to go next. Here we have another great example. 10 a.m. is in the next candle. We have a high here where we obviously think price is going to go next, considering we are this high. And we have to finish picking up this low resistance liquidity that we have built up right here, right? So let's see what the 10 a.m. candle does. The 10 a.m. candle indeed go lower. I'm going to now go to a 1-minute time frame instead of a 2-minute time frame to look for a proper entry. Now, we want to pay attention to what price does here. We go even lower than that. Go ahead and look at the 2-minute time frame again. What do we notice here, right? We see that price is still holding the bullish gap. This is something we want to pay attention to, right? Because if this is indeed the next high that we're going to go to, this gap should hold. So 10 a.m. was bearish. That's what we want. Now, all we need is for this gap to hold. And if it does, then this high is indeed the next drawn liquidity. Now, let's look for our entry here on the 1-minute. As soon as price gives me some sort of way I can enter, I'm going to enter. As you can see, price is beautifully still holding that 2-minute gap, not closing below. And there we go. That could be our entry right there with the change in state of delivery that we got right here. Now, let's see if price wants to come back to our entry so we can get a fill. It did indeed. And then let's see if we can eventually hit that high. And there we go, right? Very beautiful. But again, not the typical way ICT teaches the silver bullet. Does not have to be a fair value gap. All you need is some sort of candle that tells you that this is manipulation of the 4-hour candle. Again, right here, bullish, 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 bullish. 10 a.m. bearish, right? Right into a gap. Gap is still holding. As soon as I get some sort of entry model, I'm going with it right away. Now, that was it for this video. I'm not going to give you 1,000 examples. I think you get the point. Problem is, too many people make it a little too mechanical. Now, while it is a mechanical strategy, meaning that you don't always need a narrative with the silver bullet, right? The higher time frame really doesn't matter. The overall bias really doesn't matter. What matters here is the shorter term bias, right? But people make it way too mechanical, okay? They think that we need a market structure shift. We need a fair value gap and then a retracement into that gap. But we really do not need any of that, okay? It doesn't matter what ICT tells you. It doesn't matter if we sweep liquidity. It doesn't matter if we get a market structure shift. What matters is we identify that the 10 a.m. is manipulation. That is the only thing that matters. And typically, it will not be more than a few candles because obviously the wick, manipulation wick, is not going to be extremely large. So ideally, we just want it to be 1 or 2 candles that suddenly goes in the opposite direction at 10 a.m. Okay, that tells me this is definitely manipulation. I'm now going to look for a long. If that is combined with price still holding up a bullish gap, for example, then that is even better. Then all we need is some sort of entry model to get us towards that drawn liquidity. It does not have to be a fair value gap. As you can see, I haven't even used a single fair value gap in this video. You can use a change in state of delivery, an order block, whatever it might be. You just need some sort of PDF rate that can get you towards the drawn liquidity. And this right here is exactly how I personally would trade the silver bullet. Now, while it is not exactly what ICT teaches, this is what I believe is the truth and what you all should know. I think the reason why ICT is explaining it the way that he does is because the silver bullet is a very beginner-friendly strategy. It's not very hard to understand, but you can certainly do things that will help you with the silver bullet. Like the example I just showed you, we want to look for what PDF rates are we holding. If we have a higher drawn liquidity, ideally, we should be holding bullish gaps, violating bearish ones. We want to see some sort of change in trend with the 10 a.m. So we want to get 1 or 2 candles in the opposite direction of previous candles. And then all we do is look for an entry towards that drawn liquidity. And that is exactly how I would trade the Silver Bullet. I hope you enjoyed, and I'll see you in the next video.